then we should also stop the US dollar transactions. That is not something magic to blockchain. They will also influence volatility. We'll see more of that. We've seen it lately. Also, people said there is no business case for digital assets. And now, of course, with the bull run of Bitcoin and all the other coins following, maybe that is less of an argument. Everyone wished they had bought Bitcoin back in 2009 or 10. Not very many people are privileged with that. It's hard to imagine. It's hard to imagine. I agree with you.
Financial institutions are highly opaque. A bunch of guys sitting in suits in tall buildings in the piles of cash, and nobody knows what they are doing until the next crash happens. That is the picture in minds of most of us. Welcome everybody to another issue of Stobox interviews, where we bring industry professionals and rockstars to discuss the future of tokenization, crypto, crowdfunding, and finance in general. Our today's guest, Jacob Bosshard, CEO of Algo Traders, worked for most of his life in financial institutions and now provides technology so that they could trade digital assets. We are going to hear firsthand from the industry insider about how it operates, evolves, and what it means for everybody, for us in crypto. Jacob, it's a pleasure to have you with us today.
Thank you, Boris. It's a pleasure to be with you here today and talking about all the exciting topics around our community of digital assets. Really a pleasure. Thank you.
A reminder for our new viewers, my name is Boris Pikalov. I am co-founder at Stobox, and my co-host and business partner is Ross, co-founder and COO at Stobox. We help companies raise capital via securities tokenization, and on this channel cover a broad array of topics about how you work with crypto and tokenized securities in a legally compliant way, how to do it in a feasible way, etc. So make sure to subscribe to the channel and hit the like button if you find this interview exciting and insightful. And now let's proceed forward. Jacob, please tell us about your background and your current business.
Sure, happy to do so. So as you said, I'm kind of in financial services forever, most of my life. I'm very passionate about it, and it transformed quite a bit in the last decade. Originally, I'm a software engineer, studied here at Swiss Federal Institute of Technology in Zurich, and also did my MBA. So had always kind of been the interface between business and technology at the beginning of my career, mostly in banks, in big banks, global banks. And then, of course, I moved into fintechs now, also with AlgoTrader and a number of years also very much and fully professionally focused on blockchain. Maybe that's my background. So from our value proposition, AlgoTrader, we come originally from a quantitative trading background. So for the buy side, that means merely serving hedge funds wanting to automate their trading strategies, as they also realize, manual trading is a concept of the past. So past automation is the only way to be efficient at the markets and to make the profits. So, and with that, some of these institutions early on, a couple of years ago, wanted to also expand into digital assets. And that's when we first started to build execution strategies to access the liquidity out there on digital asset markets, such as exchanges, market makers, brokers, whatever liquidity venues out there. And that also brought us more into crypto funds, which now, especially in the past 2 years, have seen quite a development. Also, they're on, of course, strategy. So we're still in this strategy business. But on the other hand, we're also on the sell side. That means merely serving banks, where, of course, there is no proprietary trading anymore. So banks just trade in the names of their clients and maybe portfolios they manage. And we have a state-of-the-art order and execution management system, which we call Wire Swarm. And there it's about advanced execution algos such as TWAP or VWAP, or we have smart order router, always looking for the best liquidity out there. As we know in digital assets, although market capitalization of Bitcoin is now over $1 trillion, still liquidity is quite spread, so it's not like you're buying an Apple share any given moment. There is probably enough liquidity, not so for all the coins. So you have to really have a professional platform to execute those trades to the best price and conditions. So that is our mission and our value proposition.
Thank you for the intro. And now diving into the topic of financial institutions and crypto, how did the attitude of financial institutions on the buy side and sell side evolved over the last years?
Yeah, I mean, there were kind of these old insights of banks or old attitudes like reputational risk, to name one.
Mhm.
They always say, "Oh, our AML and risk department is declaring crypto as a criminal asset." I mean, it's the money launderers of the world out there, and it's Silk Road and whatever darknet and all these keywords, buzzwords. And this is really something that we have overcome completely. So there's always a small number of kind of criminal activity out there. But recently I read a report that said it kind of really to a small level compared to the
Yep.
classic market. So it's kind of 0.5% of the transactions. It's still too much. Everything is too much. That is on that side. Don't get me wrong. But compared to all the other flows, we are really not here in a corner of the world, but this is a major problem. Especially also the blockchain, of course, is a place where we can kind of track transactions. Although there's anonymity in certain degrees, still we can track the entire past, and that's not a place for someone to do a lot of transactions. So reputational risk was in the past. That has changed. Banks have clearly seen that this is really something that was kind of a concept that is completely gone. Then there are technology risks. We heard a lot of breaches in the past and hacks and everything, and people were concerned, how to access the markets there. And I think now we have state-of-the-art solutions, such as with you guys here from Stobox, with us, with custody providers. So we've gone a long journey here, and we've gone with technology to a level where we can handle all these risks out there, and especially the blockchain, highly secure with the cryptographic protocols, or per se an excellent concept, but also from accessing it, doing trades, doing custody, we have everything in place that all these things that happened don't have to be exposed to a financial institution. Then
Yeah.
there are, of course, regulatory risks. Always said, oh, with cryptos, we're falling here through. And then they say, what the heck is going on? And cryptos are not regulated. We've seen now most regulators have really seen that they need to support this. We've seen it lately in Liechtenstein and Switzerland, where the laws of DLT have been clearly established. We've seen it in the United States, for example, that custody services are fully regulated starting last summer, and we see now the impact of that, many people moving into it. So the regulator is catching up, and I don't think this is a pitfall any longer. Then also implementation costs, then people said, okay, accessing the blockchain, doing trades, custodial services, oh, it's a huge burden, a huge project. And that is not longer the case, because we have state-of-the-art solutions. We have network of solution kind of in our community, where all the things fit together, like anti-money laundering,
Hmm.
trading, custodial services, KYT, KYC, and all these things have nicely fit together. And there are a lot of solutions out there which are more plug and play. Then also people said there is no business case for digital assets. And now, of course, with the bull run of Bitcoin and all the other coins following, maybe that is less of an argument, but still, we believe also with the plug and play infrastructure, the business case is very nice. There's a lot of demand. We talk to all the banks out there, and they say their clients are really asking for digital asset, not just Bitcoin. We come to talk about tokenized assets. So I believe these things have changed quite a bit, to answer your question, and it evolved. And now the big institutions out there are really enabling trading, investing. So we have seen quite a journey here in the past 2 years. And I think we're really at the level where a lot of financial institutions are daily trading and providing services in our world.
Yeah, I agree with you. But we see that with increasing price of Bitcoin, it moves other industries towards, especially digital securities and other services. And regarding what you mentioned of reputation risks, I want to mention that the most amount of dark transaction made in fiat currencies and US dollar, and it doesn't mean that banks currently not to work with fiat payments, and it is very strange, and currently a lot of banks do not understand the differences.
Exactly. You're right. Then we should also stop the US dollar transactions or monitor them better. And again, I mean, Ross, you have a point. Then it's on us to kind of educate and
Yeah.
train those banks and just to understand that there's not something magic to blockchain. And we love it by all due respect, but still it's something you can understand. You can understand how the flow of transaction goes, how it's locked, how you can control it. I believe everything's there. So I think the ball is coming back to us here from the experts to educate the partners out there and make them understand we have gone through a journey and we are at a different level than we were a couple of years ago.
Hmm. I wonder, from your perspective, what are the main requirements for institutions in crypto? So
Mhm.
does it differ from what common traders need?
Definitely. Oh, there's a few things we need to look at. I believe they have certain institutions trade large volumes, which may, of course, I
Hmm.
mean, there might be individual traders or whales that have really kind of large volumes as well, but I'd say institutions by definition, they have a lot of turnover and a lot of positions open, closing, and quite a bit of volume. So they have different needs. So they need a flexible order and execution management system, that depending on the order size, you can do requests for quote, for example, and you say, okay, I want to buy 50 Bitcoin or so, already can be uh, an exposure to price slippage, then you need to have really a good network of trading venues and or you even have a request for stream, you can constantly get quotes and then commit at the right moment, or you do it like um, a smart order router or algorithm out there. So these large volumes somehow have to be mapped into the available liquidity. That's certainly different from a private trader if you want to. Usually, if you were trading on one or two or three exchanges and you compare a bit, and you can still do the old kind of several screens and you compare and you place the order manually here and there. It still works. For an institution that doesn't work, so you have to kind of have algorithms, and it's the only way to access the market. Then, of course, there is then the settlement process, which is also involving counterparty risks. So maybe as a private investor, as you don't deal too many big of an amount in US dollars, it is not so much of a problem, but the counterparty risk is really there. So how do you do the settlement, especially for exchanges now? If you have to transfer large sums of fiat, you have to trust. And of course, if you talk to big exchanges, Kraken, Coinbase, or OKX, so maybe it's not so much of a problem, but depends a bit, it's still you expose yourself. So the settlement process is certainly has to be absolutely bulletproof. And there are ways around it. We've seen it now with off-exchange settlement coming, with networks out there for settlement, or special banks or fintechs providing these transfers have to be dealt with. Then maybe again a regulation. So large institutions are always in the scope of the regulator more than any private will ever be, and also they have to constantly see that they are reporting and doing the right thing and aligning with the regulator. So I believe these are a few things that we see are different requirements for an institution playing at a different level. Most of all, I believe it's really the large volumes and the settlement. There are other things, but these two have to be clearly addressed and pose a risk for a large institution.
Probably this is especially problematic when we are speaking about low market cap coins. So one of the biggest potential is probably when institutions are going to transfer from these well-recognized things like Bitcoin and Ethereum to going really into
Yeah.
the depths of alts. And when you have something with market cap of 10 million, I wonder, how do you solve the liquidity problem and all the risk when you are dealing with this kind of coin? Will they ever be interesting to institutions for trading?
It's a very good question. I ask myself that also quite many times. To begin with, no. I mean, they look at the market cap, and also since institutions trade in the name of their clients, like banks, they would just offer the biggest and most liquid coins. But in fact, I believe the demand from the client will come to invest in those smaller caps and smaller coins, maybe with a big future, and say, okay, I want now to invest and profit from the development of such a coin. And why should I then move away from my institution or bank where I'm trading with just to have a private wallet again and deal with all the burden maybe someone from the street can't easily handle that we are very much used to. So I believe they will come, and then we have to somehow see how this liquidity is controlled. Do we build different algos? Do we kind of portion it up, or maybe have to trade over several days or so? I think there will be answers to that, but currently the institutions have not reached that. They leave that completely to private trading at the moment.
Yeah, perhaps this will be handled via ETFs and different kind of index funds combining many small cap tokens for them to have a decent liquidity.
Exactly. Yeah. Maybe there is ETF, there may be a structured products with a basket of coins. And also these coins, by the way, it's also something we provide here with AlgoTrader, that you can automatically hatch such a product. And it could also be dynamically hatched. You don't have a fixed allocation of a coin, like say you have kind of 2% all the time. You could also make that kind of dynamic, running a little strategy and making it adaptive to the market development, to the liquidity, certain parameters. So I agree with you. So the classic products could even help, expose that better to a client. And in the background, you manage the allocation of these coins or the basket of coins. I think it's a very interesting concept. And we've seen lately ETFs and others are exploding through the roof, which is also a sign of demand of customers.
Yeah, agree. Thank you for insightful reply. So currently we see a, a big interest from more institutional companies in crypto in general. And what do you think? How will institutional adoption impact crypto volatility and price?
Yeah, it's an extremely good point. Of course, we have seen now with Tesla moving in, clearly
Right.
affecting the price. I mean, everybody was able to see that, Although, I mean, you think 1.5 billion or maybe, I don't know, whatever came on top is, yeah, what is it? The not a huge part of the entire market cap, but still we know, since we don't have the liquidity yet out there to the full extent, it's already affecting the markets. And I mean, what are the coins driven by? Mostly, I believe it's still demand and supply, isn't it? So there is, of course, it's also general market conditions and how people, but mostly it's demand and supply. So if the demand goes up by such a big institution coming in and buying a big portion of it, it certainly affects it, And the scarcity helps in that sense, that this will even push the price further on. And we also clearly see it, in the past year, prime brokerage, for example, has exploded. Everyone's trying to bring up a prime brokerage service, and that's exactly meeting those needs, that you buy large quantities, you have lending, borrowing at a large extent. And also that shows that the people believe institutions come and they will actually influence the price. They will also influence volatility. We'll see more of that. We've seen it lately, past months, but clearly demand and supply is the main force. I believe, I'm not sure what you think. I think it's still the main force here, at least at this stage where we are in.
Mm-hmm.
In case of Tesla and Elon Musk, it is very little line where you acting as a opinion leader, and because everybody can speak with their community and say something about companies in what they believe. Yes, and in case of Elon Musk, it is very thin line where he acting as influencers and when he is acting as a market maker of Bitcoin or Dogecoin from a regulatory perspective.
Yeah, there's also difficulties. Yeah, I agree with you with his statements.
Or
Also,
GameStop or GameStop
yeah,
shares.
yeah.
So some group of influencers they said that, okay, it is interesting shares, everybody can buy it, and they collect a community who made an impact, and from other side they make a market making on the shares.
Hmm. Hmm. Definitely, definitely. Yeah, yeah, it was very interesting to see that, that for the first time really visible, social media have enabled people to strike at one point, or influencing the world here by a tweet or something. That's very interesting. We've seen it before, but I believe now we've seen the impact is so big,
Yeah,
that is astonishing a bit, Of course, we understand the mechanics, but still, and that will be more the case as long as we don't have a huge market capitalization. I think at some stage cryptos will be such a big portion of the overall capital market that this probably will be diminished a bit. Currently, in this growth phase we are in, I believe it still has this influencer kind of pattern that we see.
Yeah, although this like wild west state of the crypto industry and low liquidity, which means that it can have a huge rise in price in a very low time. This is one of the reasons what makes the crypto so interesting right now, including for institutions. So maybe in 5 years, when the market cap will be not 1 trillion but 10 trillion, and moving the price will take much more effort, maybe the as an asset, crypto will become at least less interesting. And on one hand, or maybe we'll simply see the move to lower ends of the market cap. What will be at that point at what trillion or 100 billion market cap, nobody knows. But this will be the market where we would be still able to see these huge price swings and create and maybe slightly manipulate the market in order to do the real profit that people can currently in crypto and with Bitcoin.
Fully agree with you, Boris. So we'll see that happening, and maybe then I'll look back to these great times we had here with this volatility and market cap going up. I mean, everyone wished they had bought Bitcoin back in 2009 or 10. Not very many people are privileged with that. But the fear of missing out of this institution is clearly there. So they want to
definitely.
jump in quickly.
Okay, now let's move forward to another topic and speak about other use cases of blockchain in finance, which financial institutions oversee. So please tell me, what are the main benefits and use cases of different blockchain applications, specifically for financial institutions?
I mean, let's talk a bit about the benefits first. So I think what is interesting, for example, for a sell-side institute like a bank, it's offering a new asset class to clients. That's most of all. It's something completely new, and we've seen statistical analysis that it is largely independent of the other markets. Of course, there's a bit of global thing, and then COVID happens, then of course it's also affected, but it's largely independent. Then also they can clearly see the benefits is now they can move into crypto assets which are already mature and existing and everything's in place and protocol and markets, and then expand into digital asset security tokens or other tokens since they already have an infrastructure. So it's very kind of a good pipeline of values that they can build the house on, so to speak, starting now with the most liquid crypto assets. Then, of course, it's also a bit giving you a new image. Kind of benefit is you're participating in a large innovation, in a revolution. The blockchain affects so many areas, not just here crypto and digital assets and our markets here, but so many other areas. And you take participation in innovation and can also propel that towards your clients and say, look, here we are an innovative institute. We're offering these services early on. And of course, benefits is all the operational efficiency of the blockchain. Transactions going through faster, settling, transparency, all these kind of things. So we believe also the blockchain. If you just think still T+2 for most of the capital markets, it takes 48 hours to settle everyone and every intermediary. Is still something of the past. We should be faster in today's world where people trade around the clock. Yeah. There may be some use cases. Yeah. So clearly, I mean, the cryptos are an area for diversification of portfolios for ultra high net worth individuals and high net worth individuals. Clearly they want to see. So clients demand, I want a certain percentage of crypto in my portfolio just to profit from the diversification. And then there's also other institutions out there which could profit from the blockchain use cases. For example, if the hedge funds, kind of would tokenize their funds, for example, they could create more transparency towards their investors. They could say it's not just a black box you invest in, but we can show you what's going on, what is really going on behind the scenes, could create more trust there. Then, for example, private equity is also something that you guys are very much in. Could be moving private equity around and people investing in it. And also here, the blockchain is clearly a use case here to propel private equity, which we don't have today. Then for us, like here, startups, venture capital transparency, also where again, maybe other financial institutes invest on how you can move money around, invest it, make it transparent what's going on, participation, a huge case, I believe here, where the blockchain brings quite a bit of advantages here. And there are others out there, of course, than other areas. But I believe alone in the financial services area, there is so much benefit using the blockchain that we are just about to see evolve. It's great. So there's almost endless possibilities, but we don't have to go far. So private equity, but being one which is very much in reach, that you'll see a mass adoption here of being tokenized and being offered through various institutes.
I am a huge believer in the tokenization of private markets in general and the benefit of access it brings and liquidity, and therefore more money which can be poured into efficient business and innovation. And also I'm a believer in the tokenization of private equity funds themselves, because for many individuals investing in startups and small and medium enterprises can be probably overcomplicated, because it requires you to have a very deep expertise in the specific fields to assess whether the industry is promising, whether the figures of the startups are good and bad, and maybe having a layer of private funds, tokenized funds as intermediaries, which on one hand give you exposure to private markets, to common individuals, but on the other hand, do some kind of selection, is the way in which markets will go to create the real access to private markets, not only for high net worth individuals and institutions, but also for everybody among us.
I agree. It's this democratization that we want to see. So we have much larger participation of investors. So I'm absolutely with you. Maybe also one thing I wanted to give another case here. So where I also think it's a huge case where pressure will come in is, for example, in trade finance. We're moving so many goods around the planet, and even more so now in these Corona times. And there's so much money flowing through, and all this participation of banks and insurance companies and large corporations in that will also be much more kind of eased to see what's going on, who's investing in that. And also soon the pressure will come that we have a central bank digital currency, which in some countries, like in China, it might be that trade finance can only happen using the digital yuan, So it could be that without being on the blockchain, so to speak, you cannot even participate in trade finance. It could be a barrier that soon a lot of these institutions have to take. They have to be able to trade with the digital currencies out there. And just to participate in this market. So we'll see not just kind of people pushing innovation, but also being forced into certain areas where they have to participate in our digital asset world just to be there at the table.
To be honest, I'm not a big believer in CBDC because from my perspective, it is a big trick from the government because they will promote it like decentralization, but it is not enough decentralized. It is centralized, and they control all of your transaction, your taxation, what you buy, what you sell, what you have. And it is one of the layers how they can control you, because the main goal is to not make any transaction in cash. And that's how they can reach this goal through CBDC as well. And it is great instrument from the government, but not for common people like we.
I agree with you, Ross. It's a bit of Big Brother that we see, and it's one step ahead. On the other hand, the entire fiat on ramp, that we see here from institutions coming in is also sometimes cumbersome, as you don't have a closed network yet between coins or stable coins or whatever. So, but to be followed. I agree with you. This point is showing up, and we have to be serious about it.
And very important that the government, I mean, government of US or China of the CBDC, they will promote and speech very sweetie about decentralization. It is online payments. You can pay and buy food for food on the market. You can do what you want, but common people cannot. They don't know the differences between real decentralization and CBDC, and
Exactly,
it,
exactly, Ross.
it will be very hard to explain them.
Yeah, it's
Although I
again on us to do education and training, Ross. I think again to show the difference, the subtle difference of the two things. Yeah. Sorry, Boris, you wanted to say something.
Yeah, that's fine. This is one of the reasons why we're having this conversation at all, to do this kind of education.
Mhm.
Yeah, I actually believe that in the future we are even more likely to see tokenization of assets in general, not only superior from the economic perspective, but also regulatory enforced, because what you can have is compliance on chain, is fraud, at least in some cases, becoming impossible. So I think we are quite far away from it, and governments are not yet recognizing the potential. But maybe in several years, we will have more and more communication and discussions on how tokenization and blockchain may be leveraged to actually enforce regulation on financial markets. And this is, I see, one of the, for companies engaged in the tokenization, one of the most promising opportunities for growth, I would say.
Absolutely. Using the concept here of smart contracts and how we do business, I absolutely agree with you. We can reduce, if not eliminate fraud, from an institutional point of view on how we design the system, how we design how the use of the blockchain is actually implemented. And I agree with you. It's a great opportunity for us to resolve one of the biggest problems we have currently in the markets.
So based on your conversation, do you think that tokenization of securities and the hype around tokenization is justified, that there is real interest from financial sector in tokenization, both in tokenizing its own securities and investing in tokenized assets, in investment bankers supporting deals with tokenized securities, etc.?
Definitely, as I see even those banks skipping cryptos. So they're saying cryptos will leave apart. We're going right to tokenized assets because we see the potential there. And so probably there's a kind of various things to look at. Of course, there are all the non-bankable assets today that were very hard to trade, and that's where I was mentioning, of course, just for the sake of completeness here, art or whatever kind of fancy collectibles that are really hard to trade. If you want to trade art, I mean, you have to be really into a network of experts. You probably have to have agents. You have to go to certain events, and be into it. So people from the street here or regular investors have no chance of entering that whatsoever. And hence this will be something you can make publicly tradable, and have a share in this. It will be a great demand. So the fractionalization of these investments, you don't have to exclusively own an entire car or an entire painting. Is certainly going to democratize the world here. So there's other benefits, like improving liquidity, all of these things, maybe much more liquid because we have smaller fractions that can easily be moved. There will be more turnover. There will be actually a market around this. And I think banks see that, that there it will be demand. Most of all, I think the best case, I believe currently at this stage, is private equity.
Mhm.
Because as we said before, tokenizing private equity, I think which Stobox also did, and other institutions did, it's a great thing. It's something. If you look at the cumbersome process here of bringing a new investor into a company, a limited company, or just a private corporation, is very, very difficult. You need lawyers and paperwork and everything. And if you have a framework that you can invest in this very easily, like you buy a share here, a traditional stock here on the classic markets, it will certainly be a big business. And also, I see there again pressure from those banks in particular. They have a huge portfolio of private companies that they do the entire handling, any corporate for themselves. So they have a bunch of lawyers, they do a service, and they even fear now if they leave out tokenization, someone else is going to eat the pie, because they're kind of then, if it's so much cheaper, to be administered in private equity, and there's even a secondary market where people can move capital around, then they will move off the classic way just for the reason of economy, because it's much better, cheaper, more flexible. So I believe tokenization, to answer your question, that has a great future. And I even think the demand from those institutions is bigger than for cryptos or altcoins or whatever digital assets we already have there, because the potential is merely endless, and we already start. We have private equity out there. There are cases, and it's not something you have to wait for the future. It's happening right now.
I think we are at inflection point where we need to start when the market, we have the regulation out there. We have first proofs of concept and cases out there. And the technology is now here. There is Stobox, there are many other companies that create the technology for securities tokenization. So currently we are at the point when all the aspects, elements are here. And we just need simply to assemble them and start doing the actual work.
I fully agree with you, Boris. We're at this point, and we'll see the adoption spread around, and a year or two in the future, we'll talk totally differently about tokenization. Maybe even find another term for tokenization, which for some people is sort of, what is it all about? Maybe it's more publicly known as what we do. And I think it has a great future.
Yeah, and what other challenges and barriers for the adoption of tokenization and other blockchain solution by financial institutions?
So most of them we already addressed, that the thing is sort of, you have to build an infrastructure or consumer service, I mean, it's still a bit, as I said, for most people, a bit the black box. How do you actually launch a token here, or do kind of what is ERC20, what do you do? And also most people would have to be building even a service themselves for buying technology such as from Stobox, or outsource it completely. So that may be a barrier here for tokenization. I don't think it's on the business side, on the idea, on kind of the legal framework or something. Of course, the regulator plays a role. It's a certain barrier. You have to make sure absolutely you make it. For example, private equity, you can't sort of miss it. Maybe it's different for collectibles or something, but if you have private equity, there is a legal background and ownership, which is in the hard sense. Of course, it's also for a collectible, but here it has more kind of legal impact. So the regulator is certainly one, but I think most of all, it's building a service here. And but other than that, I don't see much of a barrier, because I think we have the technology, we have a market, we have people out there. So in fact, it's just you have to jump, you have to jump into the water and start swimming. So I don't think there is much of an impediment overall.
It's glad to hear. And we've talked a lot during this interview about how blockchain and tokenization are promising for financial institutions, about the huge interest and efficiency gains. But I think there is also a threat for them, because what we can have, especially with decentralized finance, is not financial institutions becoming more efficient, but financial institutions being replaced at all by blockchain and by the code. So I'm curious to hear about your thoughts on how would decentralized financial institutions operate, and are they really afraid of these kind of prospects?
Currently, the fear is minimal, because it is just in the making. But I mean, there is a threat that the classic institution is replaced by an autonomous organization here, financial institutions run by smart contracts that we see DeFi happening. Borrowing, lending, everything can be fully automated. And then there is no central institution needed anymore. So I believe there is a kind of a threat here for the classic institutes. But I mean, this is happening all the time. So it's just a matter of embracing it or kind of or fighting against it. You know, I mean, when we invented the internet and then we had the kind of e-banking coming up. In fact, you also replaced a bit the client advisor because you could do banking online all the time. You know, you wouldn't need to go to an office there or to down to talk to someone. And the same thing happening here. No, you don't need to always kind of fill out the forms for a credit. You can get it online here through the means of DeFi. And it's just an evolution step. So then the players in the market just have to think on how they position themselves. You know, if they ride the wave, they can shape it. You know, they can bring their own services. You know, they can write their own dApps. You know, they can be part of the ecosystem. And if you don't, then maybe at some stage you're going to be extinct. You know, because the market will pass it. Of course, it will take a little while, but I believe it's as always with these changes. If you ride the wave, you're not left out. You can shape it, but you have to embrace it. And I think DeFi will be also have a great future because the advantage is so big, you know, for a lot of people who don't participate today in banking, who cannot have a bank account for various reasons. You know, still a large portion of the world doesn't have it. You know, like they don't have the other impediment, internet access. It's also something we have to overcome. So the barriers is still big for most of the people. And if DeFi gets closer and closer to everybody on the planet having access to these financial services, then I think the demand will be great. So again, I think DeFi also a great future. But for those classic institutes out there, I believe they have to adapt and be part of it, or eventually be left out or lose some of their business.
Will be very interesting to see Goldman Sachs or JP Morgan as decentralized organizations.
Yes, it's
No.
hard to imagine. It's hard to imagine. I agree with you. How can it be? But I believe also, I mean, also they will transform and probably a younger generation will take place in their management and have a different kind of thinking. And I mean, they're already embracing now at least crypto custody and they will see more. And if the clients demand it, I say, if they want these institutions to be delivering such services or being part of it, I think they will shape, you know, because the market demands it. We see it now with the cryptos too. You know, if the clients want it, the banks is going to move. You know, if the pressure is big enough, then they say, why is it not my bank doesn't offer it, the other bank here around the corner offers it? Sorry, I'm going to jump. You know, same with DeFi. Sorry, I need borrowing and lending. You guys are too complicated. Yeah, I'm using this dApp here to do it. So be it. You know, I think there we have the power as investors and clients. You know, and we'll shape the world. And those big ones will adapt, I'm sure. But it's hard to imagine as of today. I agree with you. But we've seen many things change in the past year, and we'll see more.
Jacob, thank you for the fantastic interview. Thank you for your optimism, for your energy, and for great insights into what happens on this large institutional market so that we could have a better understanding of what happens in these tall towers on the piles of cash. So thank you for being with us today.
Thanks a lot, Ross and Boris. Really a pleasure being here. Also, this vivid discussion, I really enjoy it, and hopefully some people can join in and also express their opinion. Thanks a lot.
Yeah, thank you.
Thank you to all of our viewers. We have many other fantastic interviews that I encourage you to join. Subscribe to our channel, watch how securities tokenization from Stobox or liquidity solution for Algo Trader can fit for you. Stay tuned and see you in the next interview.